Let's just start with the sourcing, the material from this. Just tell us to the extent that you can, obviously, not to going to reveal your sources and whatnot, but where did this information come from that you based this piece around?
Sure, yeah. So this is part of an ongoing series we're doing called the Secret IRS Files that is based on, as the name suggests, a sort of trove of tax records covering thousands of the wealthiest people in the country. It's something that obviously I'm limited in how much I can talk about in terms of the sourcing, but this is material that shows very detailed tax information about wealthy people in the country that we've confirmed many different ways and has been the subject of sort of ongoing reporting.
And the piece here really focuses on the implications of the tax bill that was passed during the Trump administration, the Tax Cuts and Jobs Act, I guess it was called. And this was, by all accounts, really the only piece of legislation, of meaningful legislation that was passed during the Trump years. And by all accounts, it seems to have been really the primary Republican agenda: cut taxes. They also wanted to get rid of Obamacare. They had nothing to replace it. They failed, and they decided not to repeal it as a Republican Party. So, I mean, broadly speaking, give us sort of the top line, sort of generic description of this bill, and then we'll look at who it helped. I mean, it really is stunning, I have to say, as you give that generic top line, how much that is largely irrelevant to the implications of this bill, right? I mean, there's so much benefit for such a narrow set of people in this country that it's almost unimaginable how that disparity between this is the American population, these are the people who really gained from this tax cut.
Yeah, I mean, so first of all, you're right. It's interesting given how much ink has been spilled about the Trump administration. Looking back at it now in hindsight, like this tax bill from 2017, his first year, until you get to COVID in 2020 and the CARES Act, which is not really a planned part of the Trump agenda. This is it in terms of legislation. Like this is the Trump legacy in terms of obviously in terms of legislation. Obviously, they did a lot of other important things in
Judges
terms
and
of
whatnot.
yeah, right, exactly. But when you just look at everything Trump said and promised in the campaign, like the one thing he delivered was this big tax overhaul. So basically, what it looks like in the broadest terms is they cut the corporate tax rate. So that's the rate that is at least notionally paid by big companies like Amazon or Coca-Cola or Exxon. They cut that from, I think, around the top rate from 35% to 21%. So big corporate tax cut. They cut the individual tax rates a little bit, like that you or I or any individual income taxpayer would pay. And then they did a bunch of other sort of slightly more difficult to understand things. One of the big things they did was soak California, New York, Massachusetts, and the like by getting rid of the what's called the state and local tax deduction, which basically just says if you pay a lot of state taxes, you get a break on your federal taxes. So they limited that, which wealthy people in these blue states were hurt by. But the other big thing they did, which was the focus of our story, was this thing that is called the pass-through deduction. Now, there's a lot of tax jargon here, but it's basically, when you look at what it actually means, like pretty simple, which is there's a whole class of companies, actually most companies in the country don't pay the corporate tax, the corporate income tax, like are not like Amazon, AT&T, but generally these are privately held companies, and they would range from, the store on the corner that you buy food at to some really large companies. And they introduced a new deduction that cut the taxes on this category of companies by around 20%. So that's what we're looking at.
And I want to go deeper into that and this whole concept of pass-through companies and whatnot. But let me just, so that people recall, when you talk about those state and local tax deductions, people refer to that as the Salt Deductions. And this is becoming actually a big issue in the context of the Democrats' budget that they're trying to pass through reconciliation. There's about, I think, 9, some would say moderate. I would say corporatist at best, maybe Democratic House members who, largely from those big states that you're saying, want that that put back in or rescinded, if you will, that you can deduct the full amount of your state and local taxes.
There's 2 ways you can be taxed as a company. So the first is, as I mentioned, like the Amazons of the world, companies that typically are publicly traded. You could buy a share of them on the stock exchange. As you mentioned, these are called C corporations. The way that works is if the company has a profit, then Amazon, for example, at least notionally, would owe corporate tax on that profit. Now, Jeff Bezos owns a big stake in Amazon. And in terms of Jeff Bezos's individual taxes, at this point, he hasn't paid anything. Bezos, if he takes money out of Amazon, which could come in the form of a dividend or selling a share of his stock and making money on that, he would then owe personal income taxes on that. So there's sort of 2 layers of tax. Now, most companies in the country, it turns out, are not set up as C corporations. Instead, they're set up as what are known as pass-throughs. And so the way that works is, so to give an example, one of the companies we wrote about is Uline, which is a huge distributor of packaging. Like if you've ever used like a paper bag, there's a decent chance it's made by Uline. Like look in the bottom, you'll probably
the pop store, the plastic pop stuff that you protect your glassware with, or that type.
Yeah, they sell like everything. They have a big catalog. It's almost like the Sears of the 21st century at this point. So this is a giant company. Like they have like 7,000 employees or something like that. It's based in Wisconsin. So when Uline makes profit, because Uline is organized as a pass-through, they don't pay the corporate tax. Instead, the profits, quote unquote, pass through to the owners of the company, in this case, the Uline family. And then the Uline family pays income taxes on those profits in the same way that like I pay taxes on the wages I make from my job. So instead of the 2 layers that would happen with Bezos and Amazon, you have 1 layer of tax. Now you could get into a whole lengthy and boring discussion about which you'd rather be, and it kind of depends on a lot of variables, some of which have to do with taxes, some that don't. But to go back to your question, so some common types of pass-throughs would include the quote unquote S corp. That's actually what Uline is. LLCs are typically pass-throughs. Most businesses in the country are pass-throughs. And so this tax cut that was part of the Trump bill was a tax cut for pass-throughs. And the way that President Trump talked about it, and a lot of the proponents, was this is all about small business and quote unquote Main Street. And the truth of the matter is different for reasons that we can get into.
Well, I want to, and we're going to take a break before we do that. But I should just say that. So, I am an S corp that functions as what is called a loan out company. It loans out my services to host or to do a voice on a cartoon or something like that. And I personally have no employees except for myself. Uline has 7,000 employees, and we are treated theoretically as the same, at least up until that point. And then there's some added features that have been put in the tax code and these tax cuts that ends up, and of course, I would have to say we probably don't have the same revenue as different entities. Hi, folks. Sam Seder here. Catch the exclusive version of this show on The Choice from MSNBC on the Peacock app, at 4 p.m. daily, at least Monday through Friday. That's Eastern, 4 p.m. Eastern.